Good afternoon and welcome to our monthly Switzer Report webinar. I'm Paul Rickard, and of course, I'm joined by the founder of the Switzer Report and investing guru, Peter Switzer. Hello, Peter.
Yeah. Hi, Paul. Investing guru. You don't call me that very often, I got to say.
Well, happy to call you that this week.
Yeah. Tricky week, but like we have been, both you and I have been saying, it's due for a pullback. It's due for a correction, and that's what we're getting. Happens in September and October. It invariably creates a buying opportunity, which materializes between November and April. And I'm kind of expecting this to happen. And Paul, let me remind people who probably don't watch the charts as closely as I do. This kind of sell-off happened at the end of September last year. Then there was a bit of a kick up. Then in October, there was another about 8 or 9% sell-off. And then it was off to the races for the rest of the year. And boy, particularly in the USA, they were really off to the races.
Okay, let's get back to that in a sec. I might just start with some housekeeping matters. First of all, is the disclaimer page, which you can see on the screen in front of you. And really what that says is we don't know anything about your individual circumstances, particular needs or investment objectives. So what we might think is brilliant financial ideas or recommendations, they may not be appropriate or suitable to you because your circumstances could be quite different. So if in doubt, we always encourage you to go and seek the appropriate professional advice before acting on anything we say in this webinar. So it's really important that what might be appropriate for somebody else is not necessarily appropriate for you. So just with that important caveat. So that's what the disclaimer says. Okay, let's go onto the webinar. We'd like to keep this webinar to exactly 60 minutes. It's just after 12:30 p.m. Eastern Standard Time. We'll be talking summertime from next week for, I think, Peter, for those of us in the Eastern States, or part of the Eastern States, but that means we'll finish by no later than 1:30 p.m. Eastern Standard Time in Eastern Standard Time, I guess. So if you have something else to do or go and plan or whatever it is, we know it's a busy day. It's a busy day in the market. You can set your watches by that. Finally, and just in terms of this is interactive webinar, we've got quite a few questions in already, but some are coming in. 2 ways to ask a question. One is you raise your hand, in which case, if you click on that button, we'll come to you, it will unmute you, and you can actually use the inbuilt microphone in your laptop or whatever device you're using, and you can speak the question to us. Alternatively, you can type it in on the Q&A button and just type the question in there, and we'll also try to get to as many of your questions as we can. So that's the important housekeeping matters. I'd just like to start, although it seems so long ago, September, when the market's off a bit 2%, but just to have a look back at September. It's a funny month, Peter, because we actually outperformed the US in September. We actually only lost 2.7% in price terms, whereas the US markets lost about 4.5%. And if you add in the dividends, we only lost 1.9% to be up about just over 14 and a bit percent for the year to date. Not a lot of difference in the different parts of the market, although the top 20 sort of got knocked off a bit more. And that's often what happens when the market sells off, is the big stocks go first and the little stocks tend to follow a bit later. But I guess there's not really too much of a take on that data, Peter, is there?
No. I think it's interesting that small caps did as well as the ASX top 20. Top 20 have been doing pretty well. It's over the year to date. Top 20 was up the most. I would have thought that. I think there's going to be a rotation into a lot of really good quality smaller cap companies, Paul, going forward. But anytime the big 20 gets sold off too hard, there's going to be buyers. And I think with the iron ore producers, for example, there'll be some buyers, improving the ASX 20. But my feeling is smaller cap companies are going to do well over the next 12 months.
Okay. Let's have a look at just the sectors, because this is showed a few reversals. I guess the big mover here was energy. Oh, I thought I put that in green. Anyhow, energy up 16.7% in the month of September. That's the biggest. That was the best performing sector in the month. It's taken a long while to get energy stocks to perform in Australia.
So you're saying that should be green for those
That
people?
should be green. Yeah, that's my mistake, folks. But and pretty well, I got a few things wrong there. Most of the other sectors are in the red, but energy was the big standout, up 16.7%. I'm not sure how I got that wrong, but anyhow, I did.
You're drinking red last night, Paul.
Yeah, and that was the big mover. I guess the other take here is materials were the big negative, and only up now 1% in the month. And I guess after today's performance, that sector's largely negative.
1%.
The big take is financials is the best performing sector, still up 1.6% of the month, and up 28% year to date.
Well, you said materials up 1% for the month. You meant year to date.
Year to date, yeah, yeah. That the data's right, just the colours are wrong. So I'm just alluding to the materials are only up 1.1% year to date, and after today's market is probably down. But I'm also just highlighting the materials. Sorry, the financials up 1.6%, 28% year to date, and obviously the reversal in terms of energy, which finally got a lift, got a fillip, given that it's been a real drag on the market and has underwhelmed compared to what's been going on in the US.
Yeah, Paul, what's going to the utilities? Because you've been holding a solid view that utilities are going to be in favour, and we see that big super funds are chasing our utilities. What do you think is going to happen there?
Well, I mean, I think the trouble is our utilities are very power related, and so we've got the ESG selling in a lot of those companies. They're not. It's a funny sector now, Peter, because it's so much dominated by power, and we don't have much else. And so I guess it's also had the drag of AGL over the course of the year, and that's why the sector is negative. But I think some of the more infrastructure plays are clearly in demand, and that's why it's gone up over the month. Spark Infrastructure and AusNet Services are probably enough to why it's a positive in the month. But I think it's still an underwhelming sector, Peter. I don't think that's going to change in the short term.
Okay.
Anything else that you want to remark upon on that data?
No, I often like to look at the sectors that have been underperforming and ask myself the question, are they going to keep on underperforming? And history has taught me that it doesn't underperform forever. So if we look at materials, a disappointing performance for year to date, and I'm not trying to say that there's going to be a turnaround anytime soon, but I reckon when you take a 12-month view, I think you're going to see that next time we talk about this, say in 12 months' time, that material number will be a lot better than 1.1% for the year to date.
Yeah. The other one I might just highlight is communication services at the top, and that's Telstra. REA is also in that sector, and the other one, which has certainly had a bit more of a bounce back in the last month after doing nothing for a couple of months, has been TPG, which has suddenly had a bit of a run up. So that sector was positive. Okay, let's go to the if we go to the next slide, Andre, which is just on is the rotation on. So let's and what stocks will win and which will lose. So you mentioned the small caps, Peter, but let me ask that first question: is there a stock market rotation on?
Yeah, it's certainly happening, and in big groupings, the period after a crash and a market rebound. In the first instance, you find those growth stocks are often really chased in the early phase, but then soon after that, the value stocks take over for 3 or 4 years. And one of the stories I wrote, if it wasn't last Monday, it was the Monday before, I actually showed the chart that this is the time for value stocks. And I can remember, guys like Roger Montgomery after the GFC crash of the stock market, that period like 2009 to 2012, Rogers, who was basically a value fund manager, did very well. The stocks he picked out did very well. But when I got into later phases, his local stuff wasn't as good, and he actually started an international fund to chase the growth stocks that were clearly in the US, like the FANGs and whatever. So this is a phase where value stocks often do well. And, the kind of stocks I think fit that bill are ones that are going to be benefiting from the cyclical boom that I'm expecting in 2022. Once we get over the vaccination issues, the Delta issues, the opening of borders, all those sorts of things, put them together, and stocks that have been neglected because they had problems around the coronavirus, I reckon they're going to be beneficiaries. And there'll be other companies as well that have just basically been ignored. But as we get back to business normal, they will start doing well.
Okay, so let's go to some. I probably should ask the second part of the question. Are there any standout stocks for you in the rotation yet?
Yeah, I like, for example, see, when the Americans talk about value stocks, they lump materials, because materials benefit from a cyclical upswing, which I'm expecting in 2022. And the fact that our materials are sold off now, I think creates a buying opportunity for 2022. I don't necessarily think we'll be doing handstands by Christmas with them, but I bet you somewhere in 2022 we'll be very happy if we loaded up on BHP, Rio, and or FMG now. Well, not now, but in the not too distant future.
Okay, so let me go to a question then. I've got a question from Max, Michael, and James. This came in earlier on BHP. And they're all along the lines, is it too early to buy BHP? So let's start with the BHP chart. Given by what you say, Peter, you obviously think they're in buy zone. Are you buying yet?
I think we're in the buy zone, but you could be wrong by a couple of weeks, and it might go a little bit lower. But I think the worst of the drop is over.
Okay. And you're basing that on just you're feeling this whole thing with China is just sort of, they've done what they need to do. You feel that the drop's too big, that a lot of this price is already in the share price. What's just the sense on that?
I think there's a lot of things going on in China at the moment. Evergrande is one problem, and Evergrande's a big property developer. It demands steel for all its development and whatever. And there's going to be problems around that, which might extend well into the beginning of 2022. But I think that we're still going to see the rest of the world economically rebounding out. And by the way, China's really important, but there are other economies out there that are important as well. Europe, USA, some of the Asian tiger economies, they're all important as well. And I just think that we will see iron ore prices improve over 2022. And just don't take my word for it. I checked out what the analysts are saying, and for BHP, the upside is 28.7%, Rio is 28.5%, and Fortescue 28.4%. I've never ever seen all the gains around those numbers. But what I thought was quite fascinating was BHP, which of course is the company you prefer more than others, not one analyst thinks it goes down from here. All of them had rises, with Macquarie being, I thought, Macquarie was the most optimistic with a 52.38% rise. They think BHP is heading to $56. And, as I've often said, even if they're only half right, I'd be happy with a 25% gain on a company like BHP.
Have you bought any in the last couple of days, last week or so?
I will be soon.
You will be soon. Yeah, well, look, I think they're.
I figured, I wrote this morning on the Switzer Daily that it's going to be a bad day for the stock market. So, and I think there's going to be a couple more. I don't think this is over yet, but I still don't think there's going to go much lower. That's okay.
So we'll just continue on the China theme for a moment, not directly related, but we'll call that questions done on BHP, Rio, and Fortescue in particular. A question here that came in. Let's just talk about Evergrande because it's back in the news, I guess, a little bit. I was just reading something from the NAB about how they expect that to play out. But a question here from which came in from if I just find it from somebody. On Alex, what's your view on the potential impact of Evergrande on the market? Do you want to have a stab at that?
Yeah, I think it will be measured. I don't think there's going to be look. there was a very good interview on Monday's TV show of Marcel von Pfeiffer. Now, Marcel runs a hedge fund called Arminius Capital, and he he actually made the point that the international banking exposure to Evergrande was unbelievably low. It was like 5%. And he then compared it to Lehman Brothers, where the international bank exposure to Lehman Brothers and the GFC was huge. And so I think we can wipe out any idea that Evergrande is going to cause some kind of financial systemic problem. It will have an impact on Chinese economic growth. But Paul, Chinese economic growth, I haven't got the latest number in my head, but I bet you it was around like 8%. So it might end up being 6.5% for the first half of, or the period from now to the middle of 2022. But when China roars out of this, it'll be a much stronger growth. And I think that's the kind of thing. Remember, the stock market always buys ahead of the time. They don't wait for the improvement to come. They either anticipate it or bet against it.
Yeah, it's not in China's interest to slow economic growth too much, right? I mean, I think people got to forget that. I mean, there's some interesting data. Obviously, in the data front, we've had the PMI data coming out of China on the last night, which actually suggested a contraction, which wasn't particularly positive. We've had a noise saying, coming out today about going stock up in commodities because, they're obviously the power outages right through different provinces. You've got the summit in Glasgow coming up where probably they want to be seen to be a bit greener. You've got the Olympic Games in February next year, which I doubt they don't want to show the world they can't have electricity. So you sort of, I come back to the thing is that despite all the bearishness, the Chinese, they're a managed economy, right? And they'll manage this Evergrande exit, whatever the best way they need to do. And the last thing the Chinese authorities want is to strangle that growth. So I'm a bit more of an optimist. I don't really see the Evergrande thing as, it's just to me it's a bit of a convenient story for why a very strong equity market was due for a bit of a pullback, Pete.
And Paul, when you talk about the Beijing Winter Olympics, that they also want the air to be really clean, and China will cut down industrial production ahead of this sort of thing to clear up the airspace, and then once it's over, they'll get back into business as normal. And what about the fact that the coal price is going through the roof right now, and it's all linked to the fact that there's energy problems here.
Okay, that's a good segue into Whitehaven Coal, which is WHC, I think, guys. This is a question from Joe. I haven't looked at the Whitehaven Coal chart because it's sort of these ESG stocks we sort of haven't looked at. Wow.
It's boomed, Paul. It really has boomed.
So look, if you ask, guess his question, look, what's happening? Well, coal prices are through the roof because China can't get enough of it, and our coal is a lot cleaner than the Chinese coal, and there's some other issues there as well. Keep going. What do you do if you're a Whitehaven Coal shareholder? Just don't sit for the ride, or what?
Let's have a look at what the analysts are saying. Boardman reckons there's a 20% upside. They've got a target price of $4 on that. Morgan Stanley, they have a 14% upside, $3.80. I think the analysts are saying the reasons driving coal prices up right now aren't going to change in the short term. And so, when they're writing stories that there are power outages in China, they're not going to solve that by not buying coal. So I feel as though, by the way, I won't play coal for one very good reason. It's like gold. You just don't know all the moving parts that can determine the price. But for those punters who looked at the ridiculous price on Whitehaven 6 months ago, they've killed them. That was a risky play.
Well, it was $1.40 back in May. You couldn't give it away, right? It was so much ESG selling. Look at it now. But anyhow, would you get on now? I wouldn't. I'd just say I've missed this. But if I've been a Whitehaven Coal shareholder, I might take a little bit of profit. But I reckon I'd be hanging on for the ride, I think. But
at least a 6 month ride there.
Yeah. Okay. It does just show you the rule. Whenever on the markets do going one way, it's usually the wrong side. Okay. Let me deal with another commodity one, South 32, which has a mixed bag of commodities, I must admit, but it was the unloved child from BHP. Let's have a look at South 32, which is S32, Andre. this from Ray.
Yeah.
I hadn't realised it was up near $3.50. It's not probably the way I would be playing the commodity cycle. I just don't like South 32, Pete. But what do you think on that?
But you like that, Paul. If you don't like something, you
Yep.
very seldom turn around and start liking it. Like you never liked VUK because it was the rejection of NAB's English
Yep.
subsidiary, but it's done fantastically well since the crash. And also, I think Julia Lee about 2 weeks ago said she liked S32, which kind of surprised me. I hold S32, I've got to say. And she said the diversified collection of mining products it has is actually good for it at the moment. So, you know, where iron ore is off the boil, S32 is going up. Well, it doesn't have iron ore.
Yeah, I mean, it doesn't. And some of the things that it does have, nickel and aluminium and a few other things have come back into vogue a little bit. So I think maybe I'm just prejudiced on South 32 because I sold it at about $2.80 about 2 or 3 years ago, and it's now higher. So
Let's say on average 12.5%. I was going to get the biggest one. The biggest call comes from Credit Suisse. They got a 25% upside. Target price $4.40.
okay, you heard it here first. I'm not necessarily on that, but let's just go with that. Okay. Then we'll go to another question. This one from Arthur. We'll just stick with a few mining stocks, and then we'll go to some other themes. Thoughts on Chalice Mining? Chalice Mining, which is CHN. I'm not sure there's a lot of analyst coverage on Chalice Mining.
That's it. What are the code in, Paul?
CHN.
CHN. Okay, Chalice Mining. I don't think it's going to be covered. Oh, it is. Well, he'll like this. $9 target price, $47, and that's the average. You know, you might find there are some much bigger urges on this one. I'm going to have a quick look, see what the range is. We've got only one analyst, and that's the 47%. That's Macquarie. All right, so looks as though it's got a bit of upside there, Paul.
Okay. All right. Let's go to a question here from James. I think there's someone else has probably come in with this question today. It's about ELO. It hasn't performed well. We had ELO on the small caps. His question is, would you sell and cut your losses or hang on? So ELO is, we'll put that chart up, Almost Software. I'm a holder. I bought ELO about $5.20. I haven't cut my losses on it. What did you make of what they had to say at our seminar? Sorry, on Tuesday, Pete.
Yeah, unsurprisingly, like most CEOs, they find it really difficult to try and reconcile what the market thinks of their business, and all the CEO wanted to tell us was all the good stuff that's happened, and a lot of good stuff has happened. He did concede, Paul, that the reopening of the economy would be better for his business. And so lockdowns haven't been great. You know, the resurgence of the coronavirus overseas in the previous 6 months hasn't been great. So my personal view on ELO is I really think it's a good business in the right space. It's not a small cap company. It's actually a company that's really on the rise, really. So about 600 employees. Has done a lot of acquisitions, and I think the acquisitions are good acquisitions. I'm hanging on. I'll probably give them 1 more year on the basis that I think business normal will be certainly around by the middle of next year. If they don't show a response, then well, then I might have a couple of losses.
Okay, I don't see them doing anything wrong, Pete. I'm a bit like you. I want to give them a bit longer. The share price is not heading the right direction, but I'm not seeing any.
And they get tied in with tech, Paul, don't they? Because they are software as a service.
Mm.
But to me, it's nearly infrastructure type services for small and medium-sized businesses. You know, so it's accounting and or more it's IR rather than accounting, IR and a whole lot of other services. So I just think they've got potential.
Okay, let's go on another one, which is also under a bit of pressure, is Appen, and you wrote about Appen, APX. You're going to stick by Appen as well, is that right?
Yeah, I should say, by the way, the analysts think ELO has a 75% upside, so that's one. Look, I'm sticking with Appen only because I really, and the analysts think Appen has 54% upside. I just think it's a very good company in the right space. Can anyone convince me that artificial intelligence and machine learning isn't the way of the future? It is, and this company's in it. And I just think it's going to need a little bit more time. Like, I'd be disappointed if I don't see some improvement in Appen over the next, say, 3 to 6 months. 6 months, I probably would cut my losses if I don't see improvement. It is also in the tech space. And Paul, you know, when the bond yields go up, the market just goes selling off tech stocks. But then they realise that some tech stocks are still going to do well even with rising interest rates. So I just think this is a company worth hanging on to. But I can understand some of this. I've had enough of this.
Okay, a question here that I'll get you to answer, Peter, from Michael. I like this one. Any idea what the City bear market checklist is looking like lately?
Yeah, I tell you what, I promise everybody who's watching now, I'll include it on Monday's show. It's not an easy one to get. I think the last one they did was July, which I don't. They don't change that quickly. But I think
it might be the Monday after next, I think, Pete. But
holiday,
yeah. But have a look at it. That's it'd be good to see how that might have moved.
Negatives were on the July one was, I think, seven or 8 out of the 18.
That's gone up, right?
It's gone up. It was 4.5. It was 4.5 or 5 before coronavirus and all that sort of stuff.
Yeah. So now 7. That'd be worthwhile. Just see where that's sitting. So thanks. Thanks for that question. Maybe that's a good follow up for you. Okay. A question here on about AMP. This is from Wu Xin, I think. Sorry. AMP bought at $6 years ago. Today, share price around about $1. Yeah, dollar, just over $1. Any prospect of a turnaround at AMP? While you're thinking, Pete, if you want, I don't think there's any chance of a turnaround. The only chance is they sell the business and the sum of the parts is worth more than the share price to me. That's just how I see the business. But what do you think?
Wealth management business turning around. I think the brand name has been really hurt, and a lot of the advisors have pretty well gone on their own or joined other groups. AMP Capital is a very good asset. I don't think they've ever really exploited their bank very well, Paul, have they? So I can't. I guess a private equity deal, but that's been tried before, and they walked away from it, didn't they?
Yeah, I think they've been very slow to put the stuff on the chopping block. So I don't hold any AMP shares, but I did think that by now they would have sold most of it off, and you would have got a lot more better return as shareholders. But if you're looking for your capital to do something better, I'd get out and reinvest it elsewhere. So I don't think there's any chance of a turnaround at AMP. Okay, a couple of questions here on. A question here from Avita. Sorry, on Avita. This is from Max. What are your thoughts on Avita following on from this morning webinar update? Hold, sell, or accumulate?
Well, I didn't see it. And I must admit, I haven't checked the US, because the local analysts don't look at Avita, but the US analysts have been very positive towards Avita. Maybe, Paul, I'll just have a quick check, see if I can pick it up. But at this point in time, I don't have a view on Avita, but I will pursue it going forward.
Okay. Question here from Christopher. Hi guys, Chris here. CSL, Cochlear, and Wesfarmers will all pull back, or that's to be expected. Do you think they're in buy territory? Just start with CSL first, Andre. It's come back a bit. It's yeah, look, it got to $310, I think, last week. We're back a bit. What do you think about? It's getting close back into buy zone, Peter. What do you think?
Yeah, I think so, Paul. This is, yeah, I've actually picked this Avita thing up here.
Right.
So it's on the US market, it's $17.70. And the forecast is the high is $60 US. The median is $36 and the low is $20.97. So even on the low forecast, and there's about there's quite a lot of forecasters for Avita. The lowest one is $20.97 and it's $17.70. So on that criteria, I wouldn't be dumping. And remember, Avita is a bit like all those other healthcare companies that were really hurt by the coronavirus when lots of the kind of surgeries that would have been done, the hospitals that might have done the surgeries weren't available. So I'd be inclined to give them another year to see as the US becomes more normal whether it can make a rebound. Now, you got next question?
That CSL, it's off this morning. It's come back. It was about 310 mid last week. It's come back to come back a bit. So, do you think this is in buy zone?
Yes, definitely. You down to? I think CSL is a stock. Like for example, I think we bought it. It got us like about 245, didn't it, Paul?
Yep.
I think we got tricked to buy it around 300. But then when we saw it 245, we had the dollar cost average and rip into it then. And of course, that 245 investment when it hit 312 or something, it was a terrific investment. I think this is such a great quality company. If the market wants to temporarily not like it, it's always good to buy.
Yeah, I mean, I think it's pretty much market bound at the moment, Pete. So look, if the market's going to fall away again, we get some bad news in the US, CSL will go with it, right? That's just medical stocks are sort of probably being caught up in that growth category getting sold. So you will get a chance to buy lower. But I think this is probably getting back towards buyer territory. You could argue it's sort of range bound between about 270 and 310. That's where it's been trading most of the last year or so. And it's about midway at the moment. But I think there's some opportunities. Cochlear, I'm not so sure about. There's been a bigger fall back on Cochlear. Cochlear is seen as being a lot more overvalued. Again, I'd probably be looking a little bit lower for Cochlear before I got back into Cochlear, I think.
Yeah, both CSL and Cochlear have 5 or 6% upside on average from the analysts.
Okay. So a question here on Austral, which is ASB. We can have a look at that, Andrea, I mean.
Okay. Yeah.
Yeah.
You've actually been a bit of a fan of this.
Well, I have never owned it, Peter, but I'm not quite sure why it's sort of so much in the dumps that it is.
39% upside, say the analysts. I know it's a pretty good business. Paul, I wonder whether the sale of this sort of stuff has been affected by, the fact that there's a lockdown on and say there's not much travel in between states and all that sort of stuff. It really could be an implication for a business like Austral. The best I can see is 65% upside, $3.10. That comes from Citi.
Okay.
And all analysts liked it, Paul.
Okay. All right. So let me move on. We've got a question here from Ross. Love the show, fellas. Would like commentary on NBI. I'm just not sure what the commentary is. NBI is as an income fund.
It is listed.
That's listed that has. Let's have a look at NBI, Andre. It's has a portfolio of high yield bonds. It's trading a little bit below NTA, but you'll see it's trading between about 189 and 193. So I'm not sure what the commentary you want is, but it's in the.
Paul, I reckon he wants to know: do you think it's going to go back to $2, or is it was above $2 before the coronavirus? So anyone who basically goes into NBI, are you looking for the income, which is what ranges around 4 to 5% now, doesn't it?
Mm-hmm. Yep.
But they also would be thinking, well, does Paul Rickard think there's chances of capital gain, going back to $2. And if that's the case, it's a double whammy. Get the income, get the capital gain. So go for it, Paul.
Well, I think it's just range. It's found a level, and the market's probably putting a little bit of a discount on it because you've had a little bit of pressure on bond rates generally in the US. When that tends to happen, sometimes the high yielders move out a little bit more. So, when you get the 10-year Treasury bond yield moving from 1.3 to 1.5, the whole curve's moved up a bit. And you probably had, just to talk about Evergrande, probably puts a little bit of pressure on spread. So, I think it's an interesting income asset. It's higher risk, but in a portfolio where you've got a diversified portfolio, there's opportunity for it.
Paul, can we get Andre to put up, say, the 3-month chart of NBI?
We've got that now. I don't think you'll see much there. Yeah.
Well, I do see something there.
What do you see?
Well, we'll see.
I want to move on, Peter. I've got a lot of questions to go to. So.
It was at $1.87, and now it's going to $1.92, and that coincides with rising bond yields in the US as well. NBI will benefit from rising bond yields.
Yeah, in the long term. Okay, yeah. Let's move on. Question here from I can't pronounce it, but about Ramsey, RHC. After yesterday's announcement, I don't recall anything significant from Ramsey, but I'll be connected. So let's have a look at RHC. It's interesting. A lot of people seem to like this stock. I like Ramsey long term. I just don't see a lot going on to sort of want me to hold Ramsey, but I'm not doing much with it. It's been at a pretty tight trading range.
Yep. I think both Julia and June Bailu have become. It was Adam Dawes, I think, and June Bailu have become Ramsey fans. So, yep, the analysts think about 1.8% upside. I'll just see if there's an outlier that even believes it's more than 1.8.
Right. Okay. All right. Question here from Christopher. Hi, gents. Chris here. Can I please have your thoughts on the following on Magellan? Got a lot of questions about Magellan. It's MFG is what you're looking for, Andre. I answered a question on this in the Switzer report. I thought it's looking almost attractive to me, Magellan. Had a big fall. I thought below $35 could be some interesting buying off 4% today, which is a big fall. I think the analysts are about $45 on Magellan, but there's quite a range, Pete.
Yeah. The target on average now is $42.68, 25.4% upside. What you're thinking here to yourself is, how long can Hamish Douglas and his team be on the outer in terms of returns and whatever? The most optimistic view comes from Morgan's. They got a $54.85 target, 61% upside. You got Orbinet, 42% upside. So there are some believers in Hamish with good reason. His track record until a year ago was very good. But I think you've made a point, Paul, that the bigger he gets, the harder it is to make the kind of plays that have been beneficial in the past.
Yeah, I mean, that's obviously a function. I mean, there's a few financial planners that have been moving money out. But anyhow, I think it's probably getting into value territory. I think if in a couple of big sell-off, I think Magellan would be an interesting stock to look at buying. Right, that would be my take on that. Is that fall from $55 to $33? For his business is a big fall, right? And that's probably getting to me to make it look interesting. Timing's going to be important there, but I think there's going to be some value in Magellan. It's still a great company, it has a great market share, and it still has some great products. So the sky's not going to fall in totally on Magellan. Okay, a question here from about ETFs to cover ESG investing. And this is from Lloyd. Please discuss a good managed ETF to cover ESG investing. I don't think there is an ETF as per se. I'll stand corrected. Then I think beta shares might have one. I think you could look at managers like Australian Ethical. I'm not sure they've come out with an ETF yet, Pete, have they?
Not that I know of, Paul, I got to say. But it's probably something we should look into, because I'm sure a lot of people would like to get something like that. Yeah.
Okay. Question here from Wendy. You like this, Peter? What stocks can we put in the bottom drawer and forget about for 10 years?
Probably Magellan. Magellan would probably do pretty well over 10 years. What else? I think Tyro will do really well over 10 years.
I think you're probably looking at companies like your CSLs, Macquarie,
Blue chippers, yeah.
Goodman Group, maybe. Yeah, I think that's sort of the type of doesn't mean you're not going to go down, because they'll go with the market, but they're the companies, Commonwealth Bank, I guess you'd put in that category, Woolworths.
Paul, 3 years ago, I was asked on Sky, exactly that question, and I went for Xero. Because I just saw Xero as being like a core infrastructure stock for business with their software program. I think it was probably around $45 then or something like that. And you can see what's happened even in the space of 3 years. So I would say, but by the way, I'd put Xero in the bottom drawer. It's going to keep on going, I reckon.
Okay, well, some ideas there. Okay. A few questions on AGL from Claire. Buy, hold, or sell on AGL? Well, let's look at the chart on that, which is a bit of a disaster.
The AGL, man, around here.
The trouble with AGL now, Claire, is the market's increasingly talking about a capital raising. Whereas I probably would have said buy and be patient, as soon as you get the market sort of talking about capital having to be raised, it just keeps downward pressure on the price, because no one wants to invest when they might be about to issue capital, raise capital. And that's been talked about in their split. And all the pressure now, you've got New South Wales. If you looked at the announcement, I don't know whether you're in New South Wales or not, but by having their target by 2030, that puts potentially they might have to bring forward some of the closure or at least retirement of some of the power stations and the brown coal asset power stations, Loy Yang and Victoria. So there's lots of pressure on AGL. I'm more worried about the capital raise as being a reason not to buy it than anything else. But it's now so cheap, it's come off so far. I hold to my AGL in the portfolio. I'm probably hanging on, but I'm not buying now because of the talk about capital.
But Paul, after a capital raise, would you buy it then?
Well, that's when you might buy it, but this capital raise isn't going to happen next week. It's just happening as part of the so-called demerger of assets to reduce debt, and that's enough for the market to just be wary about it. So, look, I think the brave call is to buy. I think the now where it is, it's in hold territory, but you're going to have to, don't expect an immediate pullback.
Okay.
You want to comment on that, Pete?
I could be tempted to buy if there's a capital raise and the share price goes down. It's going to take 4 or 5 years, I think, to materialise some benefits. But it worries me if any company that is government dependent and political problems around energy and power just makes it very, very difficult for me to put my money into it.
Okay. Question here from Tony. If interest rates go up sometime in the future, will industrial REITs like Charter Hall, which is CLW, and also to the Centuria REIT, will they come down, I guess, is the thing. So let's have a look at the Charter Hall, which is CLW. Yeah, look, I mean, all REITs go up or come down when interest rates go up because they're less attractive. That's actually come back quite a way, actually, from about $5.20. But look, that's, I guess, you probably say it's looking a little more interesting there at that price. Pete, what's your sense on things like Charter Hall REITs and some of the other REITs out there?
Yeah, I agree, Paul. And I also don't think we're going to see official interest rates rise for at least 2 years. 2022 we're safe. 2023 we'll start seeing rises. But remember, the Reserve Bank goes out of its way to keep telling us they're not going to raise rates for 2024. I think they'll have to give in because my economic forecasts are stronger than theirs, and I think I'm going to be right. I think they'll change, and yeah, they're entitled to change. But I think there are some people who believe that what the Reserve Bank says actually holds. It doesn't necessarily hold at all.
Okay, so David asked a question, explains more about what stocks are in the materials sector that you recommend for the upside. Well, material sector's got a combination of three areas. One, you've got your big miners like BHP, Rio, and Fortescue. Secondly, you've got your gold miners, and then the third sector is what I describe as the non-ferrous materials, companies like Amcor and Aurora and those sort of companies. And BlueScope, which of course is producing steel. So the big companies are the three major miners. I think we've talked about the BHP. I still like Amcor, Pete. I think that's a great company. I think even BlueScope, which is BSL. Have a look at BlueScope.
That's the one I like, Paul.
Yep.
My experts like BlueScope. It really has come off the boil. If you're going to believe that there's a boom out there for over 22, 23, booms and modernisation always needs two things: steel and glass. And so steel's good, and BlueScope's in that space.
I mean, by and large, apart from the gold companies, which is totally different, right? But they're in materials. The other are all largely dependent on economic growth. So investing in the material sector, with the exception of the gold stocks, is really an investment on growth, driving demand for commodities, demand for paper and packaging, demand for steel, whatever it is. So they are growth dependent companies. Okay, so question here from Richard: how likely is the market going to continue pulling back in October? We had a few days of serious pullbacks in the last couple of weeks. So you want to comment on that, Pete?
Well, I think we'll see some more volatility in October. There's a whole lot of things out there which we call headwinds. Headwinds are, when does the Federal Reserve taper? When there's a debt problem coming up in October in the US. The Congress has to increase the debt ceiling. The Treasury Secretary Yellen has actually said there could be a major problem if things aren't sorted out by the end of October. The US government could close down. All those things could rattle the market. And you've got China, Evergrande, all that sort of stuff. So, I think we're going to get volatility over October. But sometime in October, I think I'll probably become a buyer on the basis that as we roll into November, December, we'll start seeing some nice returns.
Okay, a question here from Sharon. As you know, Square has announced a takeover Afterpay will receive cash or shares. Sharon, it's an all scrip takeover, so you're going to get scrip. You're going to get shares in Square. I think it's 0.375 Square shares for every Afterpay share. And you're going to get a choice of whether you want. What choice you will have is whether you want them, the Square shares listed on the New York Stock Exchange, or effectively what are called CDIs. They're the equivalent of Square shares that will be listed on a local stock exchange. So there will be a listing here that you'll be able to trade. So the higher liquidity ones will be in the US, but you will be able to trade them locally. So that'll be the choice. It's all scrip, and but of course that's still subject to shareholder approval, I should say. And shareholders will get to vote on that, I think, in sometime before the end of the year.
Well,
okay.
Would you hold or sell that if you're an Afterpay shareholder?
Well, I like Square, but probably the advantage of taking the Square shares is you should get, I believe, the scrip for rollover relief. so you won't have to pay capital gains tax. And that's probably a reason to take Square shares. So I just need to check that, whether they've applied for that, but that's probably a big reason why you would actually not sell the shares now, but take the scrip when it comes. Of course, you've got the price of this at the moment just depends on where Square trades. Okay. Question for you, Peter, from Sonia. Best stock to pick up after the September sell-off. Here, put you on the spot.
Yeah, okay. I'm caught between at least two that come straight to mind. BlueScope is one. Because if I believe my own story about a rebound, BlueScope should follow the script. I also like Tyro because I do believe at the moment, whenever I go to a cafe, I'm seeing Tyro terminals all the time. But the whole lot of pubs and restaurants and cafes, I'm not seeing them because they're not open in New South Wales and Victoria. We can't get to them. So I think a company like that will be a beneficiary. It's like Webjet and Flight Centre and Qantas. They're all reopening type trades. So I think, and Paul can't talk about it because he's on the board. And I hold a fair bit of Tyro because I've always liked it. It was a part of that Zeke collection. But I still think it's going to be a beneficiary of the reopening trade. So there's two.
Okay, question here from Peter. As per previous question, Wesfarmers buying price less than $50. I think if Wesfarmers gets back to $50, I'd have a pretty serious look at them. Just have a look at where Wesfarmers, they've held up pretty well this week in the bit of the sell-off. I did write some months ago when they were about $50 why they were going to 60. They went to about 67. But look, it's a pretty well-run company, great brands in terms of Bunnings, Kmart, Officeworks, plus some investors sensibly in lithium. I think that they're a good company, but probably around about $50 would be where I'd be tempted to buy again. What about you, Peter?
Yeah, I didn't realise that Wesfarmers had fallen so far. I love Wesfarmers, but I missed the last rise, and I thought, well, I'm going to have a look at it. I won't run in getting yet, but I think it's a good company. If you haven't got it in your portfolio, $50, Paul, would be a great entry price if you look at that chart.
Okay, question from Jenny on UWL, which is a company I own. That's the old Westfield business.
Oh, yeah.
It's now, let's have a look at UWL, which is Unibail Rodamco. It's
Unity Group.
Oh no, UWL. Sorry, I think. Okay, I take it back. It's a Unity Group. I'm going to throw that one to you, Pete. Do you know much about Unity Group?
No, I don't, but I know one of my experts likes it, and the analysts think it's got 10.3% upside. And I have done a little bit of homework. I just can't remember what it does now, which, maybe it's my, it's not my age. It could be my age. It must be the fact that I'm working too hard. But when I looked into it, it actually was it had some really good reasons to like this business. And as I say, the analysts think that there's a 10.3%. So you can see the market's liked it. It's only come off the ball a little bit. So something to see what the best call out there is on this ball. The best price, is $4.21, be 11% upside. So the two analysts that look at like it.
Okay, question from Paul on Transurban entitlements, which is let's have a look at TCLR, which is the entitlement that closes trading today. Paul, which is TCLR. Have not received any info from the company how to proceed. Application of money must be submitted by next Friday. Well, I think what you'll find, Paul, is you've probably got an email somewhere that tells you to go to a site. In your portfolio, if you're like me, you'll see that you've got TCLR shares that stopped trading today. So if you want to sell the rights, you can sell them up till today. That's in my portfolio. And I think that's where you'll find it. Depends how you communicate with the registry. If it's online, if it's electronic, they'll probably send you an email. You've got to go somewhere. So hopefully that answers the question, but you've only got till next Friday to take them up. If you want to know what I thought, I wrote about that on Monday. I think that basically you follow the money on this. Although I'm not a huge Transurban fan at this price, I think there's so much big super money going to infrastructure. They're giving you some clues. Okay. Well, our sort of penultimate question, Peter, is about Linus. This is any thoughts regarding to Linus, which has just come in? I think it's Linus has pulled back a little bit. Let me just have a look at Linus, LYC.
It's pulled back, but gee, it's had a massive rise.
Yeah, it got a lot of discussion about rare earths. You might have noticed that came out of Morrison's announcement last week in the States, how we're going to help the US with rare earths because Lynas is the biggest producer outside China. Yeah, look, I mean, it's an interesting company. I mean, I've sort of missed the Lynas on the way up. Are you sort of tempted to buy into Lynas yet, or?
Well, we bought in. I think Maureen bought in at $2 something, so she's made a fortune on it for our super fund. And I always seem to miss it, but after the coronavirus crash, she picked up, and I think Julia might have talked about in the early days, and so Maureen bought it. But Paul, I think a price around $5 is a really good entry point, but I don't know whether you're going to get it because the rare earth and this Morrison story, the connection to the US, all that is really good for this company. And I just think, in 10 years' time, it's going to be a lot higher than $6.71.
Okay, question here for Shabir. Thoughts on Goodman Group, GMG? We talked about Goodman Group briefly a second ago. It's probably come back a little bit with the market pullback. Yeah, it's still pretty expensively priced. It's a great company, Goodman Group. It is an international company too, Peter. It's got a lot of assets outside Australia. It certainly picked the industrial property theme really well, but it's a very low yielder. So I'd say it's a long-term portfolio stock. I'm not sure you want to just get in at the moment, but maybe this is the entry point. It's had a very rapid rise up from those stocks the market sort of fell in love with a little bit.
Oh yeah, it was a classic beneficiary from the lockdowns because people were buying online, and Goodman Group are in the warehousing business. The consensus is 14.9% upside for Goodman, and the biggest one I can see here is Citi. They're tipping a 22% gain. So as you say, I think this is like a 10-year type stock, Paul. You put it in your portfolio. It's really well placed to the online world, the online purchasing world. That's going to get bigger and bigger, and therefore it's probably going to be a pretty reliable company. It just would have been nice if you bought it at say $15 as opposed to this one, but it's been as high as what, about 24, 25. So therefore 21, not bad.
Okay, final question here. I'll answer this from Sharon. CBA buyback closes today. Would you participate? Well, Sharon, it depends totally on your tax rate. If your tax rate's 15% or less, probably. If your tax rate's higher than that, the answer is no. It's probably going to use a final price of about $102 because it's going to be the average of the share price trading this week. Those looking to buy back in, that's encouraging because you're going to be selling at a higher price in the market. So, but it closes at 7 p.m. Eastern Standard Time. So, as I said, just depends on your situation. Okay, if you want to read more, look at some articles, and I've sort of thought I'd covered that frequently. Okay, Pete, US tonight. You'll be writing about it tomorrow, but we're getting no labor data because that's the first day of the month. It's the one Friday they don't do it. What are you expecting in the US tonight? Start of a quarter, start of a month? Had a big sell-off for the end of the month. What do we think in the US will happen tonight?
It surprised me, Paul. And the Americans always surprise me. Like at the beginning of the week, it was rising bond yields, let's sell tech stocks. And what group of stocks did well last night? Tech stocks. Yeah. And the reason is they sell it en masse, and then they start picking through and realizing that those companies shouldn't be sold off. And invariably they will buy the big ones like the Microsofts and the Apples because they aren't the real speculative tech stocks that have a lot of blue sky, and those returns are then discounted when the interest rates go up. But I don't know, Paul. I'm going to be very intrigued when I get up at 4:30 to see what's actually going on with these very unusual, but people who I admire. I do admire the participants on Wall Street. They're quite amusing and they're quite informative.
Okay, you'll be writing about that tomorrow. I've got no idea what's going to happen in the States. I think given what's happened this week, I'm probably going to go for an update, but I'm a bit surprised by our market today, but maybe that's just a reversal of the end of the month stuff we saw yesterday. So remember, look, end of quarters, end of calendar months, they're always a bit strange. So now we started the new quarter and we haven't. I'd be surprised if the market sells off. But that's my tip. You can read all about it tomorrow morning because you'll be up at Sparrows, Peter, to tell us all about it. It's a long weekend in some states on Monday, although the market is open. We'll have the announcement of the CBA buyback, but you'll be able to read Peter tomorrow, and I think next week we've got a Thursday edition coming, Peter. So it could be a lot interesting. It's always a bit strange on long weekend days because half the market's not there, but could be an interesting week. Okay. Anyhow, I think I'm done. I think you're done as well, Pete.
Well done, Paul.
So look, thank you very much for participating in the webinar. We'll put a recording of that up, and Peter will be back to you tomorrow. Have a great afternoon, and we'll talk to you soon. Good afternoon from everyone from the Switzer report team.